Yo, what's up everybody? I'm going to be doing a quick review on my trades that I took today. I only took 2 trades today, but I'm not angry. I'm not mad. I only took 2. So, yeah. There's nothing wrong with that, guys. When you get into the market and you find out that the kind of market structure is not something you're familiar with, and you can afford yourself to not engage anymore in the market after you come to realize that it's not an engageable market for you, I think it's a good thing to be able to sit back. It's a good thing to be able to sit back. So let me just review it real quick. It's going to be a short video because I only took 2 trades today and I had just stopped at the second one. And I'll tell you why right now. So let's get into it. Here we go. So this is open right here. Oh, actually it's down here. So the opening range today was not too long. It was a 30 handle opening range. So under 40 handles, we know that we're not supposed to be trading, or we can trade, but we'd have like a weird market or like a high resistance liquidity market, which obviously wasn't the case here. This was a low resistance market, but it just literally went towards one target and in one direction, and trend like fashion. So yeah, there wasn't really anything I could do unless I wanted to chase price, and I kind of saw that in these 2 positions here where I was just like trying to get in at this point, because I just figured that, oh yeah, we're in a trend like market, so it's okay to hop in these markets as it's going up. But I did it a little too late, and yeah, so let me show you guys what was my first entry. So my first entry, I tried to get in here long, and I had put my stop at the low of this candle. This one was pretty rushed. Like I didn't wait for it to come and trade back into this for a value gap. I just straight market ordered in here because I thought, all right, you know what, this is not going down, it's gonna keep on flying. Let me just get in here before it runs without me. And that's been a common mistake I've been making for like the past week or so, maybe. Yeah, like the past week. And I need to work on that because this shit is unacceptable, bro. It's unacceptable, man. I gotta fix my mistakes, and I'm not fixing my mistakes. So yeah, so pretty much I took a buy, or I took a long right here, and the stop was placed right here. As this thing was going up, I had bought, and right in the next candle, boom, stopped out. As you can see, my little stop was right here on the bottom of this candle. So I got stopped out there, waited a bit, then we were kind of trading in the macro time, and then we had this fair value gap right here on the 1 minute, and I thought, all right, we reached to the top already, doesn't look like we're gonna go any higher. So this was actually my fib levels. So I had the -1 and -1.5 level here, and my 2 points that I grabbed were right here. So this low, and so pretty much the recent swing low. I grabbed these 2 points and measured how far price might go. And before I took this trade, I thought price would only reach to -1 on the fib retracement level, or the fib target level, I guess. But price didn't do that, and let me show you what it actually did. So this was the high I thought was going to be. Like we're not going to the next retrace or the next target level, right? I thought we were just gonna hit this target level and start moving lower, because I didn't want to see price come down and fill this opening range gap, but it didn't. So once we came in here, I was like, let me go short. So I saw this fair value gap. I wanted to use it as an inverse, and it was a pretty poor setup. I could have seen this as a low not being taken, meaning that if we would have had price come down and take this low here instead, and then do something like this, come back to this right here, that would have been an entry. But I just wasn't like fully thinking it out here. I just wanted to go short because we were a little overbought, and I seen this inverse for value gap, and I seen price trading under it, and I wanted to see it move lower, but it didn't. This is this is what it did after. It just wicked all the way up here, like right away, bro, way past my stop. But luckily my order didn't close until it came a little lower, so I got out here. The risk was like $14, but I had lost $22 because of the movement up higher. So yeah, after this one, I decided that I was gonna stop there. That if price wanted to continue running higher, it can do that without me. There's gonna be a better, cleaner setup further down the road, so I just decided that I was gonna let it go after this huge wick way past my stop. I didn't even want to try again. So yeah, I would have liked to be involved if I got signatures for the market wanting to move lower, but I didn't, and that's why I didn't take any more trades after that, because it was already overbought and I don't want to keep chasing it and, you know, end up getting stopped out. Like, say I would have targeted a level after this, you know, it reached this level, this last Fibonacci level, and that was it. Formed buy side liquidity here, and now we just have buy side liquidity resting here. And then this was later on. I was just playing around seeing which one it would hit first, and as you can see, we formulated some really relative equal highs. So I'm guessing tomorrow, or depending on what happens in the overnight session, we see price come up all the way over here and take this buy side liquidity. But as for right now, yeah, the market was just moving pretty lackluster in the PM session. So yeah, that's another reason why I stopped trading, because last week and for the past 2 weeks we've been having these kind of markets that fly in one direction in the morning session, and then after that it kind of just consolidates out there and it just goes up and down, as you can see here. So I was like, the move was already made in the morning, so there was like just that's what I was anticipating. That's why I stopped for the rest of the day, because I don't want to be in this up and down movements right here. I'm trying to catch the moves in one direction, the one direction moves. I didn't really want to force anything like short term here or here, and yeah, I let it go without me, and that's alright. That's what you should do, especially if you don't want to be in a market. I don't want to be in consolidation markets. I kind of want to catch the runs in certain directions. I don't want to catch the consolidation runs. So yeah, but yeah, the reason why I pretty much just don't want to be involved in this, because it's kind of harder to tell where it wants to go when it's going up and down, and yeah, you might get chopped up in there. I mean, I've been chopped up in here before too. But yeah, if you guys look back to last week's markets, you can see there was runs where it's like we have this open lower, and then it's a really long run lower, and then after that we just consolidate for the rest of the day. So yeah, it looks like we're still kind of in the same market cycle. I don't think any signatures are changing for this week. So with that in mind, I'm going to be trading kind of similar to last week, because last week I made a good amount of profits last week. And I just got to correct the little small mistakes I was making. But other than that, guys, that's going to be it for this video. If you guys have any questions, leave them in the comments. If you guys are curious about any sort of PD arrays I use or any sort of strategies you guys want me to explain, you guys can leave a comment. I might do a video on that over the weekend or so. But yeah, guys, you guys take care, stay blessed, have a good day.